Finance. It's a word that can make people nervous, right? But it doesn't have to be scary. Finance is simply the way we manage money. This includes how we earn it, spend it, save it, and grow it. Think of finance like a big umbrella. Under this umbrella, we have different types of finance. We have personal finance, which is all about managing your own money. Then there's corporate finance, which focuses on businesses and their money. And finally, we have public finance, which deals with how governments handle their finances. No matter who you are, finance plays a role in your life. Understanding the basics of finance can empower you to make smart decisions about your money. So, let's dive in and explore the fascinating world of finance together. Let's start with personal finance. It's a crucial aspect of our lives that often gets overlooked. This is the foundation of financial well-being. Without a solid understanding of personal finance, achieving financial stability can be challenging. It's about managing your own money effectively to achieve your financial goals. Whether it's saving for a vacation, buying a home, or planning for retirement, personal finance plays a key role. The first step is budgeting. Budgeting helps you understand where your money is going and ensures you are living within your means. This means creating a plan for how you will spend your money each month. It involves tracking your income and expenses to avoid overspending. A helpful rule is the 50/30/20 budget. This method simplifies budgeting by dividing your income into three main categories. Allocate 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. This balance helps you cover essentials while still enjoying life and preparing for the future, and 20% to savings and debt repayment. Prioritizing savings and debt repayment ensures you are building a secure financial future. Saving is another crucial aspect of personal finance. It's about setting aside money regularly for future needs, like a down payment on a house or retirement. It's about setting aside money regularly for future needs, like a down payment on a house or retirement. Consistent saving habits can make a significant difference over time. Investing is how you grow your money over time. It involves putting your savings to work in assets like stocks or bonds with the hope of earning a return. It involves putting your savings to work in assets like stocks or bonds with the hope of earning a return. Investing wisely can help you build wealth and achieve long-term financial goals. Finally, retirement planning ensures you have enough money to live comfortably after you stop working. It's never too early to start planning for retirement, as the earlier you start, the more you can benefit from compound interest. Now let's shift our focus to corporate finance. This area of finance deals with how businesses manage their money. Companies need money to operate, invest in new projects, and ultimately generate profits. One of the key aspects of corporate finance is funding. Businesses need to secure capital to run their operations. They can do this through various means, such as taking out loans, issuing bonds, or selling shares of stock. Investment decisions are also crucial in corporate finance. Companies must carefully analyze potential projects and decide where to allocate their resources. The goal is to invest in projects that will yield the highest returns. Finally, businesses need to determine how to distribute their profits. They can reinvest profits back into the business, pay dividends to shareholders, or a combination of both. Section 4. Public Finance. How governments manage money. Public finance is the branch of finance that deals with the finances of governments. Just like individuals and businesses, governments need money to function. They use this money to provide public services such as healthcare, education, and infrastructure. Taxation is the primary source of revenue for governments. Governments levy taxes on individuals and businesses to generate the funds needed to finance their operations. Government spending encompasses all the expenditures incurred by governments. This includes spending on social programs, defense, infrastructure projects, and more. When governments spend more than they collect in revenue, they incur a budget deficit. To cover these deficits, governments often need to borrow money through the issuance of government bonds. Section 5. Key concepts: time value of money and risk versus return. Now let's explore two fundamental concepts in finance: the time value of money and risk versus return. These principles are essential for making informed financial decisions and understanding the dynamics of investing. The time value of money is the idea that money available today is worth more than the same amount of money in the future. This is a cornerstone of financial theory and practice. This is because money has the potential to earn interest or grow over time. The earlier you invest, the more time your money has to grow, thanks to the power of compounding. For example, if you invest $100 today at a 5% annual interest rate, it will be worth $105 in a year. Over multiple years, this growth can be substantial. This concept highlights the importance of investing early and letting your money grow over time. Starting early can significantly impact your financial future and help you achieve your long-term goals. Risk versus return is another crucial concept. It helps investors understand the relationship between the potential rewards and the risks they are taking. It states that higher potential returns are generally associated with higher risk. This means that investments with the possibility of high gains also come with a higher chance of losses. For instance, stocks have the potential for high returns, but also come with higher volatility and risk compared to bonds, which offer lower potential returns, but are generally less risky. Understanding this balance is key to building a diversified and resilient investment portfolio. Section 6. Getting started. Simple steps for financial success. You don't need to be a financial expert to manage your money well. With a few simple steps, you can take control of your finances and set yourself up for success. Here are a few tips to get you started on the right track. These steps are easy to follow and can make a big difference in your financial health. First, set clear financial goals. Knowing what you want to achieve with your money is the foundation of financial success. What do you want to achieve with your money? Think about both short-term and long-term goals. Do you want to buy a house, retire early, or travel the world? Having specific goals will help you stay motivated and focused. Once you know what you want to accomplish, you can start tracking your expenses. This is a crucial step in understanding your spending habits. This will help you understand where your money is going and identify areas where you can cut back. Reducing unnecessary expenses can free up money for your goals. Building an emergency fund is crucial. This fund acts as a financial safety net. Aim to save 3 to 6 months worth of living expenses in a readily accessible account to cover unexpected events like job loss or medical emergencies. Finally, start investing early. The earlier you begin, the better. The sooner you start investing, the more time your money has to grow. Compounding interest can significantly increase your wealth over time. Even small contributions to your investments can add up significantly over time. Consistency is key, and every little bit helps in building a secure financial future. Section 7. Conclusion. A journey to financial well-being. Finance might seem complicated at first, but remember, it's a journey, not a race. Don't be afraid to ask questions, seek guidance from financial professionals, and continue learning. The more you understand about finance, the better equipped you'll be to make sound financial decisions and achieve your financial aspirations. As you embark on your financial journey, remember that small steps can lead to significant progress over time. So start today, stay informed, and watch your financial well-being flourish.